Really, there are two roles for private debt in a portfolio, and it's probably best described through our two ASX listed funds. On one side of the spectrum, we use the Metrics Master Income Trust, or MXT, and that's really been designed to be a defensive alternative to traditional fixed income for investors. So those that are looking for a more conservative position, well diversified, reduced exposure to any one individual borrower, but getting the benefit of directly originated loans that drive that income, but limiting their volatility of capital through well diversified spread of loan exposures. At the other end of the risk spectrum, I believe that private debt can play a role to replace equities in a portfolio. And so when we created the Metrics Master Income Trust, or the Metrics Income Opportunities Trust, MOT, that was really designed to be an equity market replacement. So often you get a lot of investors that hold portfolios of public market equities for the dividends or for the income, but the volatility of their capital can be quite extreme. I believe that you can deliver lower volatility in terms of investors' capital, but attract or generate an equity-like income from private debt. And that might be income that's generated through lending to mezzanine or subordinated debt purposes. It might be where a lender's negotiated warrants or options or taken an equity stake in a business. Our view is that access to alternative non-bank sources of capital is very important for most companies. And as a result of that, if we see an opportunity where we can negotiate for our investors to benefit from any potential upside, then we think that's important to do. And that's why I believe it can play two roles. One, the defensive part of a client portfolio; at the other end of the spectrum, an equity market replacement. And so my view is that if you've got an appropriate manager that is skilled, has deep relationships in the market, can originate, structure, manage credit risk, and negotiate for and on behalf of an investor the appropriate return that that investor should receive for the risk associated with providing the loan, then I think that's a really good opportunity for investors to gain access to a pretty attractive asset class.